The most important thing to understand is that companies are attempting to increase their wealth by creating products and services. Governments are increasing their wealth either by fighting wars, passing laws, or by printing currency. So we could start with an observation in this entire last 100 years. The world reserve currency, the US dollar, is collapsing versus assets such as the S&P index. The S&P is 500 of the most valuable companies in the United States, or maybe the world. It's collapsing against real estate, against gold, against art. And it's hard to see this over the course of a year or 2 or 3 years. But if you look over the course of a century, I find it to be very clarifying. And on average, what you find is the United States dollar is losing 7% of its value each year for the last 100 years.
Michael Saylor, the founder and now executive chairman of Microstrategy, is perhaps the biggest Bitcoin bull on earth. At the beginning of December, Saylor revealed a new $600 million Bitcoin purchase by Microstrategy. According to his tweet, the company had bought an additional 16,130 Bitcoin for just under $600 million at an average price of $36,718 per Bitcoin. This now brings MicroStrategy's total to 174,500 Bitcoin, worth close to $7.5 billion. MicroStrategy's initial Bitcoin investment was around $250 million. And in under 3 years, their total Bitcoin investment now exceeds $5 billion. On top of this, Saylor personally holds 17,000 Bitcoin himself. This showcases that he has full conviction in its future. Saylor recently addressed a Bitcoin conference in Argentina. Within the presentation, he argued for investing in Bitcoin amidst global economic uncertainty and currency devaluation by central banks. In Argentina, inflation is at over 180%, so they understand currency devaluation intimately. Saylor suggests that few assets can preserve wealth and even fewer assets can grow it over time. The one that stands out from the rest: Bitcoin. Make sure to stick around to the end of the video where Saylor explains what everyone is missing about Bitcoin and why it's such a big idea. Also guys, only a small percentage of my viewers are actually subscribed. If you enjoy finance content, consider subscribing or liking the video. It's free and you can always change your mind.
Now, if you look at government statistics in the United States, they will tell you that the inflation rate's about 2%, and they'll show you a graph like this, which shows that the dollar has lost, something like 94% or 95% of its purchasing power over this 100 years. But that's based upon the consumer inflation rate. Consumer inflation is the lowest inflation rate. It's a market basket of goods that are easy to manufacture with a machine, or they're easy to print, or they're not labor intensive, they're information intensive, like watching YouTube videos, or boxed starch, or things manufactured. This is the lowest inflation rate. In fact, the producer price index is a higher inflation rate, and the asset inflation rate is higher. So it's a mistake to think that $26 in 1910 or 1920 is worth $1 in 2020. In fact, if you look at the US dollar versus other assets, you can see it's losing value at a much more rapid rate. So the consumer goods rate is 93%, minus 93%. That's this chart. The US dollar versus gold has lost 99% of its value. We went from $20 an ounce to $2,000 an ounce, and so 99%. And the US dollar against the S&P index, which is the US dollar against a corporation, a successful competitive company, or the US dollar against Miami Beach real estate, has lost 99.8% of its value over those 100 years. Now, that's not really well understood. Most people don't think the inflation rate is 7%. They think it's 2%. And the difference between 2 and 7 is 93 versus 99.8 or 99.9. Now, let's focus in on why the dollar loses value against real estate so rapidly. I'll show you a picture of Miami Beach. You see, what you notice is there's a fixed amount of beach, and all those buildings on the beach are there because the value of an acre of land on that beach is 20, 30, 40 million dollars. Very expensive. In fact, the value of an acre in Miami Beach about 90 years ago or 100 years ago was $10,000 an acre. And a few years ago, it was $10 million an acre. Today, it's $20 million. 1,000 to 2,000. Now, why is it that the price goes up so fast? It goes up much faster than the cost of a Big Mac or the cost of cereal or the cost of a YouTube video. And the reason why is because only God can make more beachfront. Politicians can't print more beach. You can't manufacture more beach with a factory. And AI can't create more beach on a silicon chip. There is no way to trick the world into there being more beachfront property. You can see it's a certain amount. It was that amount in 1930. It's that amount 100 years later. And so as the money supply expands, that price goes up proportionally. So that's a fair yardstick. And what you would say is the beachfront property is scarce, desirable property. Now, that's the strongest currency in the world, the United States dollar. The U.S. never fought a war on its own land. It never lost a war. It's been the dominant global power for 100 years. Everywhere else, it's worse. Every other country was worse. In fact, just about every other currency went to zero in that time period. And what you find is international currencies are generally collapsing at a faster rate, oftentimes 14% or even more per year. So that means that in the last 20 years, the rupee is down 47% against the dollar, right? The rial is down 62%, the Pakistani currency down 81%, the Turkish lira down 96%, and the peso, unfortunately, is down 99.8% against the dollar at the same time that the dollar is collapsing against the S&P and against real estate. In fact, the U.S. dollar lost, something like 75% of its value against scarce desirable assets at the same time that these currencies lost their value. So really, if you were valuing the peso against scarce desirable assets, you've lost 99.95% of your wealth in 22 years. This is not a good chart. But it's important to know the facts in order to decide the solution. Most investors think that they're smart, and most people think that investing is the solution. But it turns out that investment gains are generally just driven by the inflation rate. So if you look at this chart, the green line is the money supply in the US dollars, and the red line is the S&P index, the stock index. And as you can see, you could, if you didn't know about the money supply, or if you thought the inflation rate was only 2%, you would think that your stocks are outperforming inflation and your companies are brilliant and they're succeeding and your investment strategy is brilliant and you're making lots of money. But what you can see here is that a portfolio of companies is really just tracking the money supply. The companies are doing things. They may be growing 2% a year, but the same 2% a year of improvement in productivity is being offset by 2% chaos and destruction and risk and liability that people don't pay attention to. And so when you net it all out, a portfolio of companies is really just tracking the inflation rate in the money supply. And that means that if we look across investing and we look at asset classes, you can see the government and the mainstream media would have you think the consumer inflation rate is 2%, that lower, I'm speaking in the US and the US dollar, of course. Obviously, inflation rate is much higher in Argentina. But the most important point of this is we're talking about all 8 billion people in the world, and we're talking about all the money in the world, even under the best of circumstances. This is what they're looking at. So the 2% line is the consumer inflation rate. Most of these investments and asset classes can beat the 2% inflation rate, But as you can see, they can't beat the real inflation rate, the asset inflation rate, or the money inflation rate, the rate at which money loses value against scarce desirable assets. Now, as you can see from the chart, the worst investment is a commodity. You don't want to buy oil or natural gas or lumber because human beings are really good at producing lumber and oil and natural gas. I mean, we use machines, we use factories, we use technology. Is there anybody that doubts that we're better at making oil or gold or silver or platinum today than we were 2,000 years ago? It's kind of obvious. We just get better. And so, you know, commodities and cash don't work. Then if you look at the average investor, they're getting 2.9% return because they're diversified. As I've said before, diversification is selling the winner to buy the loser. Your consumer home is doing a little bit better. Bonds are a little bit better. And the diversified portfolio underperforms inflation. If you look at the S&P index, it's about the same, right? You're getting 7.5% return against about a 7 to 8% inflation rate. But all you're doing is just keeping up with asset inflation. You're not beating it. The only asset classes that beat it by a little bit, REITs, real estate investment trust, it's basically real estate portfolios. And maybe you might beat it by a percentage, but there really aren't any winners here. What this tells you is that if you own the most desirable property in the middle of London or Paris or New York City, you might be able to slightly beat monetary inflation, and most investment ideas don't work. And so if you want to preserve your wealth, an investor has to convert their currency into assets. And, currency, CNY, euros, dollars, ARS, bolivars, real, etc. You have to convert them into assets that are scarce, desirable, portable, durable, and maintainable. Austrian economists would think of this as the world's first engineered sound money. Austrian economists have been looking for sound money. It used to be people thought gold might be sound money, but as I pointed out, gold was an imperfect attempt at sound money. We have never in thousands of years ever actually accomplished perfect sound money. Bitcoin is the first monetary asset that is not intrinsically defective. That's a big sentence. Think about it. It's the first non-defective asset. People will build, if you double the price of real estate, they'll create more. If you double the price of a stock, they'll create more. They print more fiat currency. They mine more gold, but nobody can create more Bitcoin. So this is a big idea. And so here we get to the orange pill moment. I mean, the reason you want to go and orange pill everyone you know is we finally have an asset, Bitcoin, the world's leading. It's the leading scarce, desirable, portable, durable, maintainable asset. Right? If you remember, where I started in this presentation, I said, if you don't want to lose the economic war, you need to find something scarce, desirable, portable, durable, and maintainable. We found it. Now, most people think they're too smart to just buy Bitcoin. They want to be brilliant investors. You see it all the time on Twitter. Everybody's giving you a trading idea, an investment idea, an altcoin idea, a stock idea, something. But I'm here to tell you that most investment strategies don't work. If you look at the returns on the S&P index, if you held a portfolio of stocks for 30 years, you would get 7.8% return. If you missed the best 10 days or one day every 3 years, you'd get 5% return. If you miss the top day each year, the best day or 30 best days, you get 1.6% return. And actually, there's only 50 days, or basically 2 days out of the 30 years. And if you missed the right ones, then you got no return. You lost all your money. So you have to guess which 2 days each year are going to perform, or which day each year is going to perform in order to actually outtrade the market. And nobody's that smart. In essence, 99% of the time, nothing's happening. And if you sell, then you'll probably make a mistake, because on the one day when something happens, that's when all the gains take place. Now, you also can't pick stocks. This chart is the return of the Magnificent Seven, or 7 stocks versus every other stock in the S&P 500 index. And what you can see is the index might be up 11%, 7 stocks are up 53%, everybody else is zero. There is no return. Everybody's failing. 99% of the companies are failing to deliver any shareholder return. There's only a handful that are succeeding. And if you want to know something more blood-curdling, it's 7 stocks out of 7,000 publicly traded companies that are returning the majority of the returns. That's 1 in 1,000. At 99.9% of these companies, they're not beating inflation. You know, you might think that somehow you're doing a lot of brilliant things, and they're working very hard, but they're working very hard rolling a rock up a hill, and the hill is monetary inflation. So, in summary, no country can stop inflation. The companies can't outgrow inflation. Workers can't outwork inflation. Few are going to beat the market by skill or luck, but everybody can buy Bitcoin. And so with that, I want to thank you for your time and just say, stay humble and stack sats.
So there's Michael Saylor and his unwavering belief in Bitcoin. As you can see, it's not just a personal preference, but a strategic business move. With Microstrategy's massive investment in Bitcoin now valued at approximately $7.5 billion, and Saylor's personal Bitcoin holdings, it's evident that he views his cryptocurrency as more than just an asset. It's a hedge against economic uncertainty and a bastion against currency devaluation, as vividly seen in countries like Argentina. As we wrap up, remember that Saylor's insights on Bitcoin, especially during these tumultuous economic times, are not to be missed. His unique perspective on why Bitcoin stands out amongst other assets for wealth preservation and growth is something every investor should consider. Finally, don't forget to subscribe and like the video if you're into finance content. It's a simple way to support the channel and ensures you won't miss out on any valuable insights like those from Michael Saylor. Anyway guys, hope you all enjoyed today's video and that provided you with some value. I'll see you all in the next one, and as always, all the best.